So this is my portfolio, and we're back up to 16,000 worth in value. Here we can see all my holdings. We have real estate, bonds, healthcare, finance, utilities, and so on. And the goal of this is passive income. Currently, we just had I guess you could say a few days ago we had a new development. I'm a little late to it. China confirmed overnight, the FIR confirms 15,000 new coronavirus cases and 254 additional deaths overnight. So this is what everyone was kind of fearful of, whether China was going to be truly honest or clear it through, due to what happened back in, I believe it was 2003 with SARS, where they were underreporting what was actually happening. And this just confirmed everybody's concern. Uh, whether this is actually something, oh, they were just able to find 15,000 new cases overnight and 250 deaths, or whether they're actually hiding the real number. And then now this is a model apparently that's used by, I believe it's Stat News, and here they're predicting by some cutting edge model that there's going to be 300 coronavirus cases by next week. And apparently it's based on some cutting edge technology, which I'm not too sure about that, but the point of this is just the coronavirus cases are developing a little bit faster than what we actually had. Or could it be that China was just actually completely lying the entire time, which I'm not going to go too much into that. But here we have new cases. So this is what happens whenever there's some type of news that I feel like it's going to affect, and or something different is going to happen. So I already switched the portfolio, having it gear up for what's coming ahead. So for example, if I think that, although, however, today now would not be now it wouldn't be a good example since interest rates are low. Real estate stocks actually tend to not do. I guess I would say, or I would say finance stocks, since interest rates are low, they're actually not making as much money as they would when interest rates are back to normal. Which, instead of, I think right now they're in the 1%, and the 2%, the banks will be able to make more money. But actually, the banks have been performing pretty well even in this low interest rate environment. So have most of my real estate stocks. If we go into the holdings I have are, we got Tower, LTC, MPW, Realty Income, New Residential Investment Corporation, and Iron Mountain. And New Residential would be one of the riskier ones that I have here. And they were able actually to perform really well, and they just beat their their I think it was Q4 expectations, and they did pretty well, which actually caused the company's share price to go up 3%. So that one was on my riskier side, I guess, if you would consider, compared to the other ones, which are well-known, well-established companies with good numbers coming out of them, especially Realty Income. And I mean, it's my lowest holding. Well, actually, is it? No, that would be Iron Mountain. But it's my lowest allocation. It only has 13%, but that's because it only pays a 3% dividend yield, which is actually pretty good. And they're probably the best financially equipped company here. But it's the fact that the dividend is so low. But each of these holdings are only about 4% of my portfolio when you compare it overall. My actual biggest holding is actually, I believe, is AT&T. Yeah, which is 700. Then it's Tower. So I already made a couple of changes to this portfolio. For example, I lowered the consumer. It's usually 10% of my portfolio. I lowered it to 7. Uh, and then the industrials usually 8 or 9. It's now down to 6. And here from utilities and finance, healthcare, all these have been increased just because I think dividend stocks are really going to outperform in the next, in 2020 due to all the volatility. And although this put me in more of a defensive position, you would think you would say, I'm still pretty um, as exposed to you would say growth. That's what I would call it. Um, and here we have, and down here we have my, I guess you would call it more volatile stocks, which are definitely going to be accepted. So tech, telecoms, and consumer industrials not so much, but they just pay such a low dividend yield. Yeah, so consumers, well, industrials, they just pay such a low dividend yield that I decided to lower it anyway. I did make some changes to it. Like, for example, Caterpillar was one of the stocks I added recently due to them just being hammered by all this China and tariffs and all these coronavirus. I think they're definitely undervalued. I lowered 3M because to be quite frank, I'm quite sick of them missing expectations. Well, of course, I'm investing for passive income, not for, market chain, but I also like share price appreciation and dividends. Nobody wants to lose value unless that, the dividends is gonna keep increasing, but then, that still doesn't add up quite well. And yeah, so Boeing, one of my holdings, I haven't decided to sell. I left the allocation at 1%, so I'm not trying to add anything to it. I'm also not trying to sell anything, just gonna stay there, hold it out. I mean, it's not much my position there. I'm still up 3%, and it's not even barely a share. Lockheed Martin, I'm almost close to acquiring 1 share. So all these things allow me to buy fractional shares. I would say that it looks to be RSG, and I have one share of 3M and one share of RSG, maybe of United Pacific Corporation, and definitely Waste Management. So though I mean those I might increase. I guess the trash man is depending on what happens. So as soon as when these stocks get hammered or start losing their value or become undervalued, I'll start adding to the consumer target or the tech and the industrials. I'll start adding to them as soon as I see that they have gone down too much due to the coronavirus. If I do see that, then that's when I'll start adding. Energy is also one of the ones that I'll be adding a lot to this week. I mean, I'm not down very much. I mean, most of them are down. I'm up on Occidental, and I'm probably just gonna buy 200 of this week. I don't want to make it a big position. I still want to leave the allocation around 4%, just because I'm not too sure how the sector is gonna do. So I'm just gonna leave it around 4%. Maybe I could say 3.5. I'm not even sure if I'm allowed to leave it at around that percentage. And and yeah, that's mostly the changes that I made to my portfolio. So just basically gearing up in case there is a lot of volatility coming up in the next couple of months. And I feel that dividend stocks are really gonna outperform. And I don't feel like there's gonna be a lot of growth due to all this news. And I mean, the market just refuses to go down, and it did take a current dip for six to what? Well, was it 600 points? Which I did buy that dip Usually I like to put a rule. If it goes down 1,000 points, I buy 1,000. If it goes down 2,000, maybe I'll buy 2,000. That's what I like to buy and just keep investing and investing. And I mean, if we look back at this portfolio we started in October, we were at 4,000 and now we're at nearly 16,000. And right now that we're getting paid around 50 cents per month, per month, we're getting about 52, 50, 51. And yeah, I can go on my activity type and I can only look at dividends only. And I could outline them all and go back to when I was around what 4,000. My portfolio was worth like $4,000, and I have been paid a lot of dividends. And look how fast they have grown. So we were being paid around what 30, maybe 10 cents at the per share. And now since we own a much bigger portfolio, now we're getting paid around one or maybe even $9. And our biggest dividend that we received was from realty income. And so they have large yield, you could say. But yeah,